Good morning. I hope you're doing well, and welcome to today's edition of the London Session Open. Today is February 12th, 2019, and it's about 20 minutes past 7 p.m. in London when I'm recording this market update. Let's begin with our preferred setups, and then we're going to take a look at the other markets I'm watching. Still stalemate, still no visible strong trend in copper. I am treating this as a rectangle with a break to 287, lifting things to the upside, and then the alternative is a break to 254, taking things lower. It's a nice, real healthy rectangle. It reminds me quite a lot about this rectangle up here, because I traded the break to the downside here with the market traded lower with about 5% or so in a few days. The idea back then is just that a break here should take you down enough of the same as this width, and it's really the same here. So I'm looking for that. Obviously, challenges with this is that we have highs just here, also lows here. So the idea would be if I would buy here, hopefully it would go up and then down and then up, and enough really to allow me to reduce my risk in case the market just goes up to 294 and rolls over and trades back down again. Here's something to keep an eye on. It's CAD versus Norwegian kroner, and this actually is a good example as well here. If you look at it from a weekly chart, you have highs here from 2015, 1, 2, 3, 4, or 5 highs since 2015, and that's a limiting price and keeping price stuck in this massive rectangle. Not that massive rectangle, if that breaks, which will happen if we trade above 60.60, then we could rally to 17 or 717. So that's another 8.5%. So this is something interesting. Now the break happened on Monday, and the market just leaped upwards because inflation figures in Norway were softer than expected. But we are also seeing the Norwegian kroner be softer against the pound. In fact, the Norwegian kroner is one of the few, if probably the only pair I'm watching right now, or only currency I'm watching, where you're seeing consistent weakness in more than one pair. So here, I think it might potentially make sense to look to buy on a dip. Dips happen all the time, and the market was at 643 just on February 8th, which is Friday last week. So it's rallied quite a bit already. And if we take fib from the low to the high, we get these 3 fibs, and here's your 4-day EMA. So maybe down here. So in other words, a test of this, and what we would call a hard retest of this breakout, because this itself is an ascending triangle, and the breakout happened from 651. So a hard retest of that could potentially be interesting. In other words, buying down here, putting stop loss slightly deeper into the ascending triangle, and risk about 426 pip or 0.65% to hopefully the market goes up to its target, potentially make about 5.16. Here's another one to watch closely. Of course, with Brexit, it just sort of complicates things. GBP, Norwegian kroner, ascending triangle here as well. You have a high here. This is from May 2017, and then you have December 17th, and then you have a high here from January. It looks pretty much the same. Like, it's difficult to say which one is which, right? If you just get rid of the name here, then the only difference is that this is an ascending triangle, and this market triggered already yesterday, that breakout, and GBP Norwegian kroner is still yet to break. And I think this is something to keep a close eye on. And right now the market low is at 11.18, so this could be interesting. We could potentially, if we trade above 11.28, have a stop loss of almost a full percent, so 0.83, and here we could potentially rally higher. So looking at 11 6.4 times residual ratio. This is probably something, I mean, this looks interesting, and I think it could make sense to buy the breakout rather than to buy the dip in CAD Norwegian kroner. Otherwise, I'm watching some shares. Of course, you guys should know that when I'm watching shares, it's just because other markets there's not a lot of activity, which by itself is a bit of a warning sign. When you notice that you need to venture into very exotic currencies or very exotic markets, like in my case, this is exotic because I don't usually trade shares. It's a bit of a warning sign of the low quality of patterns available for us. I would have loved to trade euro dollar. Euro dollar used to be a very good friend of mine for many years, but euro dollar is not trending anymore, which makes things difficult. The AUD USD as well used to be a very nice, easy pair to trade. It's still one of the better ones, but there's not a lot of activity. Anyhow, this is a different play. You see a lot of hedge funds, for example, and famous people like George Soros. They have all these different themes. They look at deregulation in the pharmaceutical industry. If they have a view on the economy, they might buy or sell house prices or house developers and real estate companies. They look into the different sectors of the economy and take positions depending sometimes on the macro outlook. And this could be something different. For example, like if you happen to have a bullish view on gold and gold is moving upwards, then this could be something because you have a head and shoulders pattern. And that's quite interesting because you see most shares increase. So it's easier, I would say, to work with a bias. So like a stock market share sometimes, I would guess, where they always have that natural bias. And some of these companies pay dividends and things like that. So you automatically get a bit of yield and you automatically have that bias. So even if, say you have a normal bull market and then you have a specific view on some sector of the economy, if the whole market goes up with 15%, then maybe what you traded goes up with 5 or maybe 20 or 30. But it sort of goes with the big picture trend, which is quite interesting. So even if you get the views a bit wrong, just because all shares goes up, you still get a bit of dividend. Now I'm not advocating that trading shares. The big problem of shares is the lack of it's more difficult to trade with leverage, and usually what you need to do is you need to go. Of course, we can trade a CFD, but the issue here many times is that, just the access of leverage is not the same. And it's a bit of a different, these guys, the whole position is for 6 months, a year. So it's a different sort of trading, which I don't know too much about. But that's something to bear in mind. Here's another company, like buying here on the move to the upside. Another example, for example, is buying mining companies because of copper prices going upwards, or buying banks when interest rates are, I think, moving down. I think different ways of trading shares and trading macro. Here's another one: gasoline prices, head and shoulders pattern. I think on the 4 hour, let's see. On the 4 hour itself, there is something that could be roughly qualified as well as a head and shoulders. So firstly, you have this big picture head and shoulders, and you have head, left, right. So all starts to align, and most likely a break to 147 could potentially do what I wanted to do, which is to trigger the head and shoulders. Finally, Australian dollar versus the New Zealand dollar. I remain short. I did not step out of this one yesterday. It looks like there's a bit of a floor here. The market will go to 104.80, but then that's it. As you know, I had original stop loss orders at 105-ish. 105.06, but I cut half of the position, put the stop loss at above the highs, waiting for this to go down. I already discounted this and assumed that it's been stopped out. See what happens here. I haven't taken any decision, but I'm still looking for this to go down. But it doesn't really want to trade lower, does it? It still remains within this range. Literally, just about anything can happen, but in the short term, it could just go up and trigger my stop. Okay, let's take a look at other markets, and this is the euro versus the USD, where the market is just above support. I'm talking about the November 28th low. It's been a very nice swift decline here. I guess there was the 6th day of just declines. Just at support, and I think it's gonna try to maybe trigger a few stops here. It might try to go a little bit lower. It might even break out. Should we treat this as a rectangle? Probably not, but obviously you take out these levels to drift a little bit lower. I suspect we will probably just continue to trade sideways. I think we'll be trading at 1380, 114 relatively soon. Might go down a little bit, but then upwards, I suspect. It's a range bound market, which is something I don't trade. Here's GBP versus the USD. I have now lowered the buy zone to 129-ish and lowered the trend defining level to 130.20. I think traders might sell here, targeting 126.80 over the next few weeks and months. Dollar versus the Japanese yen. This was well defined, sort of a break to the upside. It's not possible to reduce the stop loss to the low. And if we revisit the breakup point, I think traders are gonna buy. Again, stop losses at 109.52. Rush-to-goal ratio on this, if we go up to the prior highs, it's 1.79, so it's not that bad, but it's not very good either. Here's the New Zealand dollar versus the USD at 67.03, so this is support. It might go up to 68.10, 68.50. It's within sort of this range. AUD versus the USD is lingering around the January 24th low. This is a range. Could easily be about 72. We're in essence just trading sideways. Break and close below 70.16. I think could slowly sort of cost the market trade to 67. Dollar CAD, difficult to deal with, without a doubt. Down, up, maybe down and then up. It's created inverse head and shoulders. That could be something. Otherwise, just trading size between 33.76, 130.66 is really what's going on. Dollar versus the Swissy. This is something we talked about. Break here, lifting price upwards, which spiked up as soon as the market opened, about 10 minutes into the new week. The market here, it's right now moving upwards, and for now I'm gonna reduce the trend defining level to something like 99.56 and maybe a little pullback of a few pip to something like 10020 could be sufficient for people to try to retest. Otherwise, weekly, as you know, this is a massive head and shoulders. Could be interesting to potentially go long here on a break to 101.28. Maybe not this week, but next week. Gold prices. This is your 4-hour chart. The market continues to try to carve out a low in the buy area. We discussed over the last few days the market, as you can see, is drifting lowers, but here it should bottom out if this is a genuine uptrend. And I remain bullish about 12.97. Market may hit 13.25 and 13.40. This, at the end of the day, has a trend, right? Has a bullish trend. This is clearly going upwards, right? since then, a few months, a few weeks. Crude oil prices continue to trade sideways. There's not much to do, but a break to 55.76 lifts price upwards, whereas a break to 51.27 should take price lower. S&P, the idea has been to buy in this zone, and the market is slowly drifting upwards. It may easily take out the high, maybe go up to 27.70 over the next few days. I think soon we can reach the trend funding level. As soon as we take out this high, we can probably take this, place it at 26.65, or maybe 26.71. The idea was to buy here. If we revisit this area, I think Trader's gonna buy again. Here is the Nasdaq 100. We said as well, Trader's probably gonna buy here for this to go upwards. Again, this is an uptrend at the end of the day, so it makes sense to be long if you want to do anything. This is the Russell 2000. You know, it's very difficult, but it's eking out those 3% return. Just taking like 2 weeks almost. We talked about buying here, going towards the target. Up here, I think people are gonna probably book a bit of profit, and we did go almost down to the breakout point, which is also where I think people are gonna buy. German DAX moving upwards. I also saw that the Japanese stock market moved up quite a bit actually, which is quite interesting. As for the German DAX, the market I think is sort of doing something like this. It's a massive head and shoulders that could potentially retreat over the next few weeks, so we're definitely going to keep an eye on that. Probably up and then down and then up again. Then you have copper, and copper we already discussed, and that's pretty much it. Okay, bit quiet in the market, as you know. Not much we can do about that, except just waiting for either a breakout in GBP Norwegian kroner or a pullback in CAD Norwegian kroner. If I had to trade any of these main markets I just shared with you guys, then I would probably be focusing on gold and stock markets, and then maybe dollar yen and dollar Swissy. Euro dollar, GBP, New Zealand dollar USD, Aussie dollar, US dollar, and dollar CAD don't have any, well, just trending sideways, which makes it difficult to trade. But dollar yen, okay, dollar Swissy, okay, and gold, as I said, and S&P 500, and so if we have that pullback. Okay, all right, guys, we're gonna wrap things up. I'll keep you posted via WhatsApp as usual. It's obviously been a bit of changes where I am right now, but obviously I'm the market analyst at ATFX, so I'm actually looking at the charts all the time anyway, so there's no difference here compared with before. I have access to my charts, and if there's anything that really interests me, I'm gonna try to trade. But I am a bit wary. I am a bit suspicious to the market. For example, CAD South African Rand, you might remember I was short this one, got our entry in the beginning of the month. If I would have kept it, would have been stopped out. I didn't hold the position in the GPN 225, so I did not hold the position in the Japanese stock market. But when I saw this decline here, I thought we're probably gonna trade lower, and I talked about maybe the euro yen as well moving down lower. But it's not really materializing the way I wanted things to materialize. And a good sign really that it's back to get involved is that you do some analysis. You do a few setups like the ones we do here, and then you see, okay, how are they playing out? Are they playing out the way you want to? That's a good sign. If the market is not playing out the way you expected, then there's a hint that maybe you're not sync with the market, and that happens a few times every year. And again, that's a little bit of a warning sign. So I want to see the market do what I want it to do, and see that more consistently than has happened lately. and that's why also I'm a little bit wary about entering new positions right now. So you need to just bear with me, and just need to see this period passed. Okay, if you have any questions during the day, just ping me on WhatsApp. Have a good day, guys, and thanks so much for being members. Thank you.